Stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
Hello, everyone. I am Jeremy Mullen, and welcome to today's top stock pick segments. I will be doing a company that I have talked about before in UiPath. The stock is a Zacks rank number 3 hold with ticker symbol PATH. Now, UiPath provides a RPA platform. What is RPA? It stands for Robotic Process Automation, which is an AI technology that allows businesses to automate repetitive and rule-based tasks by using software robots. Now, these robots can mimic human interactions with digital systems, such as navigating through user interfaces, interacting with applications, and performing data entry. I know that's confusing stuff, but the key here is they're an AI company that is getting a lot of eyeballs on it because what they do and people want exposure to AI. So the company recently posted another great earnings report, but the stock didn't cooperate. So investors are now in this difficult spot where the market isn't agreeing with the potential of this company. So today I want to dig into why there is that dynamic and why I'm a believer that the stock will eventually be a big winner. Okay, let's look at the profile page here. I'll talk a little bit about the company's history. IPO'd back in 2021 and traded as high as $90. From there, it was a bleeder all the way down to 10. The stock was crushed during the tech sell-off, and it really didn't take off until the AI space became hot. People noticed Path, the AI company. We had a couple nice earnings beats, and it went higher. So let's look at this. We have a B in growth and B in momentum for the style score. However, we have a D in value. So this is the main problem with the stock, is there's valuation concerns. So if you look down here, we have a forward PE of 44, and we have growth of about 22% over the last 3 to 5 years, and a $13 billion market cap. So short sellers in this name, they think the valuation is too high. Value investors won't touch it. So you got guys in here that want the growth, and if the growth isn't there, the stock will go down. But if they impress, the stock will go higher. So we're looking for that growth. So let's look at the recent quarter and what it's done over the last couple of years. You can see they've never missed. They've always beaten expectations, but the growth just wasn't there to support that valuation. So we're at a $12 billion valuation here. It was way higher when it IPO'd, right? So we went sideways for a while as we beat, and then we started to get some nice ones, 114%, 71%, a recent quarter of 46%, and the stock finally started to head higher. So looking at this quarter, that they just posted, revenue was up 6% from last year, while Q4 adjusted operating income was up almost 60%. This helped achieve GAAP profitability, which is a huge milestone for them. Annual recurring revenue was $1.46 billion. That's up 22% annually. And looking at Q1 revenue, and this is kind of the big disappointment, $330 to $335 million versus the $339 expected. So a little light, some would say a little conservative. But they see ARR at 1.5 billion. So that is continuing to look higher. Okay, so let's look at the estimates and see what the analysts are saying. Here we have, you can see the agreement is all higher. So we have estimates going up across the board. However, they're not moving higher in number, okay? Current year, yes. Next year, up a little bit. But I think that revenue guide really squash some excitement as far as that bottom line. However, despite that, we see analysts hiking price targets. So I find that interesting dynamic there. Truist lifted their estimates and raised its price target from 28 to 32. The stock's trading just under 23, so that's a big move. Truist likes the growth. They say it's strong, and they like emerging areas like intelligent document processing. They highlighted balanced growth and profitability with the first quarter of GAAP profitability, which we talked about, 22% ARR growth, which we talked about, and 30% RPO growth. Other analysts out there, Mizuho reiterated path to neutral, lifting his price target to 25 from 22. BMO says it's going to 28, up from 24. They have a market perform. And JP Morgan raised path with an outperform, bumping his target to 28 from 22. So there were a lot of targets being lifted. I only covered half of them that were up there, but most of them were in the $25, $30 range. Oppenheimer was one. He said management is executing well on its large customer growth and improving efficiency strategy, and the business is delivering better consistency in quarterly results. However, they maintain their perform rating on valuation. Okay, they say execution has been inconsistent and the business is in transition. They believe shares are fairly valued at current levels, and we would wait on the sidelines for a better entry point. So they like the stock. They just think that valuation is a concern, and I think that's why you saw the negative earnings reaction. So what you want to do now is look for a place to get in. So let's look at the chart and see if we can find that spot. Okay, close this, and we have the chart here. So you guys who follow me, you know I like the Fibonacci level. So if we draw from lows to highs, we have a retracement as it comes down to the $22 level that we might fall into, okay? With that, we have a 200-day moving average on the rise into this $20 area. So what I'm seeing is a 61.8% retracement potential or a halfway back. In this area, this is going to be your buy zone, and especially if that 200-day moving average sees support, I would definitely look to buying here. This would also be a gap fill from the earnings back in November. Where can we target? Up at 31. So if we get this in the next month, next couple of weeks, I would look for a move back here in the end of the year. Of course, earnings would have to cooperate down the line. We still got a couple more quarters that we're going to see into the end of the year. Longer term, perhaps we can get a move way up here. Now, this is going to be down the road, but I just wanted to show this chart from all-time highs to lows. This would be the 61.8% retracement halfway back. So this would be a sell zone for me. It's also a form of resistance up here as well. So one step at a time, though, we're going to look at the stock to see support under 20, perhaps go to 30 into the end of the year. And just to summarize UiPath, I think if you get a good entry point, this stock, you'll be rewarded later in this year. So we're talking about maybe a 30 to 40% move here. The next few quarters are going to be very important, so watch out for those numbers and the earnings reports. I think they can impress again. We will make new 2024 highs. Okay, that's it for me, and here is Ben with his.
Thanks, Jeremy. Hello, everybody. Ben Rains here. Today I'm looking at Vertiv, which trades in the ticker VRT. Vertiv provides critical digital infrastructure and continuity solutions. So the world's built on big, instantly available data. And Vertiv's job is basically to keep all of that computing power needed to drive the modern economy running as smoothly as possible around the clock. So Vertiv's role is to provide that behind-the-scenes tech that keeps data centers, communication networks, and really other critical technologies functioning at all times. The constant expansion of data centers and the rise of AI and cryptocurrency and other new technologies provide Vertiv with a massive growth runway just because of all the data needed. Vertiv stock has soared since its early 2020 IPO, and the stock's actually outpaced NVIDIA over the last 12 months. Plus, Vertiv even has a partnership with the AI chip powerhouse. So Vertiv and NVIDIA are partnered on a project that will help solve future data center efficiency and cooling challenges. And despite its impressive run, as I said, it outpaced NVIDIA over the last 12 months. It appears worth looking at the moment. So let's kind of dig into some of the data. So I'm going to go over to our some of our Zacks services to take a look at what Vertiv is offering at the moment. So let's actually just quickly start with its website so we can see liquid cooling options for data centers, various other offerings. So I said it's operating in the back end, hoping or allowing all of your data to run as smoothly as possible. Just they're at the back end. You can dig into more about what they're going to do, but you can see that their thermal management, things like that, they're hoping that all of their offerings are going to help your data run as smoothly as possible at all times. So we can see that it's a Zacks rank number 1 right now at the moment. Its industry is in the top 17% of our over 250 Zacks industries. And if we take a look, we're calling for about 11% growth on the top line in 2024, and then another about 9.5% growth next year, and then 33% adjusted earnings growth this year, and then another 24% adjusted earnings growth next year. And then looking at its earnings revisions, we can see that it's trending heavily in the right direction. We can just see starting in the sort of the middle of 2023, these earnings revisions kind of just going straight up for 2024 and 2025. And then if we go over here to our ZRS page, we can see that 2024 is up about 79, so about 80% over the last year in terms of its earnings outlook for 2024. And then 2025's outlook is up 110% since this time last year. So we can see that Vertiv's earnings revisions are trending way higher as they benefit from, as we mentioned, just the larger rollout of AI and more just data intensive offerings. So we can see this is over the last 3 years. Vertiv is up 280%. NVIDIA's topped that run over that period of time. But if we look over the last 1 year, we can see that Vertiv is up a whopping 483%. This compares to NVIDIA's 242%, and outpaces the tech industry's roughly 40, or tech sector's 45% climb. And then if we go over to some technical charts, we can see that Vertiv has kind of steadily marched with higher, with that 21-day moving average kind of being the line in the sand that the bulls keep buying into. We can see that it's a little overheating in terms of RSI levels. We can see that it's trending back up towards 70, which is technically overbought, but it's just slowly, I mean, it's obviously gone up a ton, but it hasn't had that big pullback yet. So we could maybe see a pullback at some point, but the market more broadly is finding a lot of support at that 21-day moving average as well. And then if we go to its valuation levels, we can check out, let's do forward 12-month earnings for Vertiv. And once the chart pulls up, so we can see that it's getting a little stretch. It's now a little bit above the wider Zacks tech sector, but that makes sense when the stock has gone up so much and crushed Zacks tech sector last year and last several years. But then we could also go ahead and take a look at, say, its PEG ratio, which factors in that longer-term earnings growth outlook, and we can take a look at what that looks like here as well to maybe factor in that it's trading at 1.2 versus tech's 1.9. So when you factor in its longer-term growth, Vertiv looks to be pretty solid there as well. So as I said, that's the longer-term outlook for Vertiv is that it's going to be able to grow along with all of these various sectors that are gaining a lot of steam at the moment, especially when we consider that AI boom. So overall, Vertiv's job is to make the lifeblood of the economy running at peak performance at all times without fail, operating in the background. It'll grow alongside the expansion of nearly endless data in the AI supercycle, kind of no matter which companies end up dominating that forward-facing world of AI. Therefore, there's little wonder that Wall Street is really high in the stock right now, with 9 of the 10 brokerage recommendations that Zacks has for Vertiv coming in at strong buys. And in full disclosure, I do own Vertiv stock personally, so I'm very high in the stock as well. So that is it for me and Jeremy in this episode of Top Stock Picks for Zacks. So make sure to check out our Zacks.com/promo page for a look at some of our services, portfolios, and more.